folks who are late in as we go. So welcome everyone. Thank you for joining us this morning for our seminar on cryptocurrency. I'm really excited personally to hear about this topic from our amazing panel, who I will introduce momentarily. But if you could please take a moment to add your contact information into the chat box, then following the event, we will share that information with the attendees. And if you have any questions throughout the program, you can feel free to type them in the chat box, and we'll also have time for live Q&A at the end. So now it's my pleasure to introduce today's panel. We're fortunate to have them with us today to present. First, we have Barry Field, CPA with Bormel, Grice, and Huyett. Barry currently serves on the Chamber's Board of Directors and is also the co-chair of our Small Business Committee. Then we have Chris Barber, who's the chief nerd at Cheaper Than a Geek. Chris started his IT company over 2 decades ago after recognizing the need for an IT company that focuses on customer service first. And last but not least, we have Eric Harris, who is an investor, coach, and advisor with Marathon Financial. He also serves on our board of directors. Eric works with families and individual investors with long-term prudent investing strategies. So I will now turn it over to you. Thanks, guys.
Cool. Well, good morning, everybody. We decided to get the nerdy stuff out of the way. We don't want to put anybody to sleep here, so I'm going to plow through some of the nerd stuff, and then we're going to quickly get to the more interesting things that Eric and Barry have to share with us. So we wanted to start this 101 with a few definitions just to bring everybody kind of up to speed. So you may have heard the term blockchain in a variety of different ways. And basically a blockchain is a system of recording information that makes it very difficult or impossible to change. So it's like a record keeping situation. It also makes it very difficult to hack or to cheat. It's oftentimes public. And you can think of a blockchain as essentially like a digital ledger of transactions that's duplicated and distributed amongst an entire network of computers that are all sharing in this experience. So that is what a blockchain is. One of the weirdest things we're going to talk about today is NFTs, or non-fungible tokens. If you really want to get a bunch of nerds in a heated argument, you need to come over to our office and start talking about NFTs, because everybody in my company has an opinion about this and they're not all good. But the NFTs is essentially a unique identifier that cannot be copied, substituted, subdivided. It's recorded in a blockchain, and it's used to certify authenticity and ownership, essentially. So this allows for digital files like photos and videos and audio to be authenticated. You can own an original of something, like in real life, like if you were to buy the Mona Lisa, but for something digital. And I only have one visual aid today because I couldn't help myself from doing this. I wanted to show you an NFT that sold for $3.4 million. I don't know why, but Kim, do you have that picture handy? That's right, folks. Somebody paid $3.5 million to say they own that. I don't get it. It makes zero sense to me. I could do so many cool things with $3.5 million. This would be at the very end of my list. But anyway, that is an NFT. So we got, let me make sure I'm doing everything right here. Yep. So Bitcoin. Bitcoin, everybody gets really excited about. So Bitcoin is a digital currency. It operates free without any central bank or oversight from government or actual banks. It relies on a peer-to-peer software in cryptology. So there's a public ledger, there's that blockchain, that records all of the Bitcoin transactions, and copies are held on servers all over the world. Anybody with a spare computer can participate in this, and a consensus on who owns which coins is reached cryptologically across all these different nodes, rather than relying on a central bank or government institution. So the public ledger has all the transactions, has all the copies. Again, anybody with a computer can participate in this. and there's no real bank behind it, which is what a lot of people get really freaked out about. And a lot of times, I'm asked, is it currency? It is currency, and governments don't like it. So keep that in mind. So we figured we should go over how and why cryptocurrency is being used. So some folks consider it, anti-government, anti-bank, anarchists like it, among other folks. It basically can't be traced to a person. So believe it or not, you can buy illegal drugs on the internet. And when you do that, you tend to pay in cryptocurrency so that the person gets the money and you don't know who the person is. So there's a lot of I always screw this word up, anonymity behind it. But so a lot of folks like that. You can use it for gaming, so like buying stuff, power-ups, if you will, in video games. Some people like investing in it. Eric's going to tell you why that may or may not be a good idea, but that some people view it as an investment vehicle. Just my personal opinion, I don't think it's investing. I think it's gambling because the money is just all over the place. But that's just my personal opinion. And is it regulated? The short answer is not right now. And that makes for interesting times. So that's the broad strokes, just to kind of get the mechanics out of the way and make sure everybody's still awake. But I wanted to share my experience with Bitcoin ever so briefly before we turn it over to Eric. So I was actually a Bitcoin miner from 2012 to 2014, or as I like to say, before it was cool. So I had all these different devices in my office. Some of them looked like little thumb drives with huge heat sinks on them. I had a couple that looked like a black loaf of bread that had all these fans on it. And this stuff put out so much heat and so much noise that somebody walking past my office talking to another person had to stop their conversation until they got far enough away from my office door, because it sounded like there was a jet engine taking off in my office, which was awesome. It was great. People didn't bother me. It just kept going. I had to talk loud on the phone. But other than that, it was kind of cool. So the way I did mining is basically, you're participating in the coding of these blockchains, and you're trying to crack the code as the transactions move along. And if you're fortunate enough to have solved the math problem for that block, you get rewarded with a certain number of Bitcoins. The problem is you could spend all your time and talent and all this computing resources like I was doing, and just never happen to be the lucky person that was holding the bag at the right time to get the reward. So what I did was what's called pool mining. So I participated in a large group of folks that were trying to crack the transactions kind of collectively. And then every time somebody got the problem solved and there was a reward, they would share it among the people in that pool based on how much computing resources you were throwing at it. So think of it as like a commission. So, I said I did this for about 2 years. I'm glad I did the pool because I would have never actually gotten anything because I didn't happen to be the person that solved the transaction. It's a little bit like a gamble. But all said and done, through my participation, I ended up making just over 5 Bitcoins, which is not worth this much now, but at one point was worth $250,000. So that's why people get excited about this, because there can be a lot of money into it. But I don't know. It was weird. It was loud. The equipment was expensive. I refused to figure out what the BGE drain was, but it was always hot in my office, and it was super loud. So anyway, that was my mining experience for whatever that's worth. Since then, because this has gone mainstream, mining operations are basically like these huge data centers, oftentimes in really obscure locations because the electricity is cheaper. So for a long time, that was China, and then China started cracking down on it because it was screwing up their power grid, and it was also undermining their own currency. So like you'll find bizarre places in Wisconsin that just happen to have cheap energy, and they'll put like a data center in there. So in my opinion, you can't really participate as an individual anymore. It's basically, become commercialized, which is unfortunate. But quickly, just talking about payments, it is a valid payment source. Tesla will let you buy a car with Bitcoins, which I kind of wish I did when they were worth that much money, but I slept on that, and now I can buy part of a Tesla maybe. But just so you know, it's clunky and expensive. You basically have to do like a currency exchange. You got to turn your dollars into Bitcoins to do stuff, generally speaking. It's going to probably get a lot easier to use, but right this minute, it's a little on the clunky side. The adoption's not quite there. But that's the nerd stuff out of the way. So now we can get into the interesting things as far as tax implication and investment strategies around it. So without further ado, I'm turning it over to you, Eric.
Well, thank you, Chris. It's a great start. If Kim could pull up the slides. So we're going to talk about crypto as investments. I'm an investor, coach, and an advisor, and we're not giving advice today. We're just presenting information that may help or may lead you to good questions. So let's go to the next screen. The next screen, please. We're going to go to speculate. Okay, so the word speculate is to form a theory or conjecture about a subject without firm evidence. And it's also related to gamble, which is to take a risky action in hope of a desired result or a game of chance. Next screen. Investment. Investing is the act or process of investing money for profit or material result, or assets acquired for the purpose or goal of generating income or appreciation over time. Next screen. So generally, we look at the time horizon of investing as mid to long term. And in that case, the way we work, you'd have a portfolio of equities, and they would be diversified around the world. If it's short term, it would be cash or high quality fixed income. So if you were preparing to send a child to college or buy a house or your new Tesla, you wouldn't want that money invested. You would want it in a bank, because you can have a downturn in the market like we have now. It could last a couple of years. And then if you had to use your money, you'd be selling it at the bottom. That happened to me one time when I bought a house, and I learned that lesson painfully. Next screen. So the areas we're going to consider, the crypto areas, are about the companies. There's the technology, which Chris has already done a pretty good job explaining, and companies, and then the coins, NFTs, and tokens. Next screen. So what's the appeal? Chris alluded to this and really did a great job explaining like how this got started. It's not a bank. It's not the man. There's the anarchy movement. They have a big conference every year in Mexico, and many of the speakers are from the crypto world. There's less government regulation. That's both good and bad. It's new. It's the new thing. Everybody always likes the new thing. And then there's FOMO, fear of missing out. You don't want to miss out on the latest, greatest thing, and then get rich quick. Now, there's a lot of other appeals, but those kind of sum up a lot of it. Next screen, please. So what's new about crypto? It does things differently, but crypto does nothing that banks don't already do, like payments and deposits, etc. It's just they do it in a different manner. Let's go to the next screen. So what's different? As Chris did a great job explaining, blockchain is the underlying technology, and it's all algorithms and math that come out of banks and banks of computers trying to solve problems. And when they do, they come up and they're rewarded with a coin. They have to keep that running at all times in order for that stuff to exist. It operates a lot like bank ledgers do, only some aspects it could be more efficient, and in some ways it's less efficient. It has promise for international settlements and contracts, and it is being adopted today by banks and trading houses. Now that's the technology part. So for instance, if you do an international bond trade, it can take 5 to 10 days to settle. With the blockchain, they can do it in 24 hours. That's a huge advantage, and it's being adopted today. For payments, it is clunky and expensive. The area that has a great deal of promise in is if Chris and I were going to do an oil deal in Kazakhstan. Well, we don't have really good trading arrangements in Kazakhstan. So getting payments out and stuff like that is very difficult. And there's a lot of potential for nefarious activity. But with the blockchain, we can agree on both the contract and the payment very smoothly and efficiently. So it's good for that, good for large international transactions. And then there's custody and identification issues. The thing that Chris described about having this unique code when you have your account and on your Bitcoin is a double-edged sword. On the one hand, it's very uniquely yours. On the other hand, if you lose that ID, you are truly out of the money. And there have been a lot of the companies, because they're new, aren't very good with their procedures and processes leading to theft and other things. Next screen. So what do the companies do? There are service companies that provide these technologies to other crypto companies. There's the mining that Chris described, which has moved to much bigger companies. It's becoming kind of corporate. There's gaming, and then there's the collectibles, the NFTs, and then they do bank-like services. Take deposits, you can make payments, etc., and even some lending. Now, some of these companies are going to become public, and they'll ultimately then end up in portfolios of stocks. They'll when they become public, they're a business, they're trying to create value, and so they'll be just like other companies, and they'll end up on various exchanges. Next screen. And coins, NFTs, and tokens. I'm just going to add a little bit to what Chris said. They are very volatile, unbelievably volatile. The price changes by the second. They're actively traded for speculation, not just for deposits. And they act a lot like commodities, but with no intrinsic value. Commodity being something like corn or gold. At the end of the day, the crypto is what people say it is. So it trades like that, but doesn't really have value outside of the group of people that are trading it. Next screen. So regulation is coming, and it's coming in many forms. The companies have had a lot of difficulty, as any new industry does, but they're playing in areas that are already highly regulated to protect investors and depositors. So banking regulators are definitely going to get involved because people are putting their money in as the deposits, and there are supposed to be protections. You do have none of the protections that you do, say, with an FDIC insured checking account. There's nothing like that in crypto. Much of the trading acts a lot like commodities and futures, where they're trading different products and services by selling short or going long, hedging things. And so the commodities, futures, and trading associations are definitely going to try to get involved to manage that. The investment side is the SEC. Many of these companies offer themselves as investments, not just the coin itself, but their schemes. And there are very specific rules around investments, and the SEC's all over that. And they are, in fact, fining companies daily in the crypto world and prosecuting some of the principals of some of these companies when they break the rules, just like they do for banks and stock houses. And finally, Homeland Security for money laundering and terrorism, as well as criminal activity. Every alphabet agency, FBI, CIA, ATF is involved. And they're involved because cyber crimes are rampant. Drugs, human trafficking, terrorism, it's just rampant. Next screen, please. So some of the current events we talked about, the crimes, etc. Service hacking and fraud is a major issue. These companies have not had clear rules that they've had to follow. especially when you get into some of the gaming companies, they don't have tight security. So there's a lot of the coins are actually stolen or tokens. It's amazing. Every day I've got an entire file here of stuff that's just full of articles about tales of woe. Service issues. What happens when the markets get very volatile is they'll shut down trading. And this creates problems if you're trying to sell or use your coin for transactions. And it's very arbitrary. And then there's the arbitration. When you sign up for one of these accounts probably on your phone, nobody ever reads the fine print. Well, in the fine print, you can't sue them. You have to go to arbitration. And typically that's in Singapore, and it requires a $25,000 deposit. So if you have a problem, you're most likely not going to do that. Then there is lending. They are actually taking people's coins, lending them to other people who can't get bank loans. And you can just see where problems might come from that. Stable coins. A stable coin is supposed to be a coin that has deposits like dollars in equal amount to their coin. And so they're supposed to be a inflation hedge and be stable and safe. Well, recently when the market fell precipitously, a lot of the stable coins lost as much as 40% of their value. So they don't appear too stable or safe. Next screen, please. So here are the stories. Lost ID. Early on in one of the people that involved in Bitcoin had amassed over $1 billion of Bitcoin. He lost his ID. Now, nobody can get that back for him. It's unique, it's lost, and his money is lost forever unless he finds it. You can't go to the company and get it. There's nothing you can do. Some of the Wall Street firms now are offering custody services for crypto where you may be able to, they may be able to archive that information and help you out there, but you literally can lose your money because you lost your file. Gaming theft. A game company lost $400 million because they had poor security and somebody just hacked them and just literally stole it. And like Chris was talking about the blockchain, they can see it. They can see where it is, see where it went from, but they can't get it back. Lending. A gentleman, thinking he was doing something prudent, took his kid's college education money, $100,000, put it in a crypto bank, which was then going to lend it out to people who couldn't get bank loans. They were then going to pay him as much as 19% interest. Now, folks, the 19% should be the first red flag because that's like mob territory. At the end of the day, he lost all his money. And who does he go see? Nobody. And then finally, there's Terra and Luna. Terra and Luna were part of an algorithmic stablecoin. That should scare you right off the bat because that means you're using math to produce the stablecoin, not deposits. So the idea is that if Terra went down, they would kill some coins off and buy Luna. If Luna went down, they'd kill them off and buy Terra, and therefore it would be stable. What they didn't bank on is what actually happened. It went precipitously down, both of them. Two investors. One, investor A, bought Terra. So he's long. That means he's owning it, hoping it goes up. Investor B sold short on Terra, meaning he's betting that it will go down. And if it does, he'll make a profit and be able to sell back out. Volatile market, typical for what they do in that industry. They suspended trading. By the time they opened trading, Terra and Luna had gone to zero, losing over $1 billion. And the two investors lost all their money, even though one was in the money and one was trying to cover his loss. That's the kind of thing that happens every day in that market because of not having any regulations. Next screen. So the way we view it is a prudent portfolio. It's a long game. Everything in a portfolio should either add to return or lower volatility, or ideally both. That's equities, stocks, short-term high-quality fixed income like 3-year treasury bonds. Now, public crypto companies may end up in portfolios because they're businesses. But crypto coins do neither. They don't add value, and they don't add return, and they don't reduce volatility. They act more like commodities or gold, and they're very volatile. To quote a Nobel Prize winner in economics, there is no there, and it could all go to zero. And in fact, this year, around $2 trillion of value has evaporated out of the crypto markets. That's a lot of value. We may have gotten lucky as a country that it wasn't bigger than that, so it didn't have a huge effect on the economy like the housing crisis did in 2008. So it's an immature industry without enough data to meet any academic investing principles. Next screen. So conclusion, is it for me? Well, it's an immature industry, which would suggest you want to wait until there's enough data and information to make a judgment. It acts like the Wild West, like banking did at the turn of the century, where there were dozens and dozens of banks and they issued their own currency. Some of them worked out, some of them lost all their money until the government kind of stepped in and created the dollar, et cetera. There's rapid consolidation likely in any new industry. Just think of each one of the tech booms. A lot of the companies disappear. A lot of them are bought out. Some of them are put together and they'll be good companies. Many of them will be bought by trading houses or banks or other organizations. And you're starting to see that now. So at the end of it, if you want to say, is it for me? Ask yourself this question: do you want to speculate and gamble or prudently invest? Thank you very much. And now we'll turn it over to Barry.
Thank you. Thank you, Eric. Thank you, Chris. It's all very informative. Just to start out, I just want to, the way I look at crypto and is there's the currency side, cryptocurrency. There's the currency side. There is the aiding in what I believe it was originally created for, was to assist with transactions. A lot of the things Chris spoke about and things that Eric started with earlier, as far as a means of paying for things. I remember when it first came, I read recently when it first came out, the thoughts were that it was going to change the way we all do business. And what was very in the article I read, they talked about the iPhone was introduced in June of 2007. The first iPhone was June of 2007, and Bitcoin was created in 2009. So just the way and when Bitcoin came out, it was going to change the way we do business. Think to how much the iPhone has changed what we do, and not just the iPhone, but Androids and other copycats. Just like Bitcoin, there are copycats. But think about what's happened since both of those and how far one has brought us, but the other has not quite gotten there yet. That doesn't mean we won't get there. The whole idea of blockchain, et cetera, like Chris explained with transactions. But it seems like it's been more on the investment side that we're reading all the news these days. And I'm not so sure that was the original intent. From an accounting side, I'm going to just two basic principles from a typical accountant. If you have financial statements published that you do, if your accounting is what's called GAAP, generally accepted accounting principles. That's about the most technical term I hope to use this whole morning. Is all the publicly traded companies follow GAAP, and a lot of smaller self-employed with financial statements also have statements with GAAP. If your business invests in crypto and you hold crypto, you need to report that on your balance sheet. This isn't just not the individual. This is if the business invests in crypto, and a lot do. That needs to go on their balance sheet. And when values were increasing exponentially, balance sheets were looking good, but now they're going down. So you still have to continue to report that. So keep that in mind if you have financial statements, or as you read financial statements, if you're doing your own investing. Also, it's starting to become a trend where 401k plans and pension funds are allowing crypto to be an investment in your retirement. It's one thing you as an individual, if you make that decision, Eric gave you his piece about that. If you're making that decision, but if you're an employer and you're allowing crypto in your plan, you have a fiduciary responsibility to look out for your plan, the value of your plan, and your employees. Now, there are many third parties that help hold and report, and I don't want to use the word administer, but it's sort of what they do in the paperwork side of a 401k plan. But if things were to all fall apart, those folks are not the ones ultimately with the fiduciary responsibility. It's the employer. And that could be you, that could be someone you know. It's not always the big companies. Small businesses with 401k plans, if you're letting crypto in, just keep in mind that you have a fiduciary responsibility. So that's all I'm going to really talk about on like the general accounting side. Moving on more onto the tax side. Right now, again, as the regulations are coming around, and this is still, even though it's been around for about 10 plus years, it's still fairly new. The IRS is pretty clear in general that it talks about crypto and holdings of crypto. Crypto is taxed as property. No different than almost if you own a home, if you own a photocopy machine, what you do with it, if you have a photocopy machine in your business, it falls under the general category of property. It doesn't fall under the category of currency. There's tax if you own pesos, if you own, the franc, that there's a different category of taxation because it's foreign currency. The IRS does not look at cryptocurrency as currency, it looks at it as property. So if you're an individual holding crypto, and this is as an investor, all the general rules of investing apply. What makes it very complicated and very hard is there's very little reporting. So all investors need to do that. Generally, it's getting better. And there are some companies out there that are doing some of the third-party reporting for a fee. Think of Charles Schwab, think of Fidelity, and many other companies like that. When you have your mutual funds or your stocks, you're getting your reports at the end of the year or monthly with the tax reporting statement at the end of the year. You're not getting that for crypto unless you go out of your way to find the company that's going to give you those reports. So when you first buy, say, Bitcoin or whatever amount, that's called your cost basis. It goes up or down, and then you sell it for a gain or loss, and that needs to be reported. And that's a capital gain or a capital loss. We're not going to get into the definitions and the taxation specifically. I'm just trying to give a basic. But if you own it, you buy it, and you sell it, no different than a particular publicly traded stock. Same thing where it catches a lot of people is you own Bitcoin, and behind the scenes, you never touch a penny. You sell Bitcoin, and you immediately invest that into Ethereum. So you started with Bitcoin, you ended with Ethereum. No different than doing that with two different stocks. When you sell the Bitcoin, you have a taxable transaction, gain or loss, that needs to be reported. And you now have a new basis in the Ethereum that you need to track. What gets a little more complicated, or much more complicated with Bitcoin, I don't want to say Bitcoin, with cryptocurrency, is these transactions depending on who's doing the work, it may be happening on a daily basis. Lots of buying, lots of selling, lots of micro transactions. And there's a lot of reporting. It can go on for pages and pages if you keep track of all this, and you need to keep track of all this. Also, as the values have gone down now, unfortunately for a lot of people, whether they realize it or not, capital losses are limited. Capital gains, you pay tax on whatever the gain is. Capital losses can only offset gains, and then the amount of ultimate being allowed to deduct is very limited. So folks in 2022 who were in 2021, even later in the year, or 2022, were saying the value is way down and I'm getting out. You're not going to be able to deduct potentially that full $15,000, $20,000, $100,000 loss all in 1 year. That's on the individual side. Also, some people, we've heard the term day traders years ago. A lot of people in the stock market, they were doing what we call day trading. And in that case, if you truly are a day trader, we're not going to go into all the rules today. You're taxed differently as a day trader than as a mere investor. And all those same, again, because it's property and there's no special rules for cryptocurrency, the rules for day trading in cryptocurrency are the same as whether it's stocks. So, and a lot of it's what we call facts and circumstances based on the number of transactions and the number of hours spent doing it. Just because someone has an algorithm at home doing all the work, or in the Chris's case, when he was talking about being a miner, when you have a full-time job, like I'm at work all day, I'm doing what I'm doing, it's hard. It's kind of hard to justify that I'm also a day trader and getting special taxation, falling into a different category when I have a full-time job. It could happen, but again, that's where the facts, my out in explaining all this is when I say facts and circumstances. So if anybody has any questions, I'm going to keep going, but in any of these specific areas, I'm happy to talk offline on things that are beyond the introduction to cryptocurrency. That's generally basically it on the individual side. It's no different than other stocks and bonds and how you trade and sell things. On the business tax side, similar also. Cryptocurrency, in this case, is currency. If I'm in the business, I make or I sell widgets, and you're my customer and you pay me for my widgets that I sell to you, but you pay me in cryptocurrency, that's revenue. It doesn't matter that it's not cash. It doesn't matter that there's no tax reporting. We all hear terms about 1099s and independent contractors. There should be 1099, there should be the reporting, but a lot of the reporting is not happening. But just because the reporting is not happening doesn't make it not taxable. The reporting part is secondary to the whether or not it's taxable. So if I receive cryptocurrency for something I do, whether I sell you a service, sell you goods, that's revenue to me. That's gross revenue, and I need to report it. Same note, if I take that cryptocurrency and pay you for you're a contractor, or I'm giving, whatever the inputs are, I'm buying computers from you for my business, and I'm paying you in cryptocurrency, that's deductible, just like any other business, just like I'm using cash. So it's revenue, it's expenses, and I would have net income to report on my tax return. One area where it gets really complicated, back to the reporting side, is if I'm receiving revenue as cryptocurrency and the value of it changes, and then I'm using that cryptocurrency to give to you in exchange for something that I'm as an input for my business as an expense, I'm doing two things with that. First, I have to track what I got it for. I have to track that basis, like we talked about before, as an individual. When I exchange it, it probably has a new value. It went up or it went down from the time I got it. Most the dollar doesn't fluctuate like that. A dollar is a dollar. In cryptocurrency, now it's 1.1 or maybe 0.9 from what it was originally, and you need to track that. So now I have capital gain or loss behind the scenes that I have to report separately, plus I have a deductible expense. And like I said, there are generally no forms for this reporting unless you go out of your way and add on through with whoever's holding your crypto, trying to make sure you're getting the proper forms. That's generally it. I throw out a lot of words, but it's almost like money when it comes to, even though the IRS taxes it like it's property, you can think of it no different than what you're doing today with stocks, bonds, mutual funds, other investments, whether you're an individual investor or if you're using it as currency. The biggest issue is the reporting or lack thereof, and the tracking and et cetera. Also, I just want to point out, very important, started in 2020, it changed in 2021, and it's becoming more prominent in 2022. An individual income tax return says the following. It asks and it's right there on page 1 of the tax return, right under kind of your name, your social security number, your dependents. And then it says whether at any time during 2021, this was last year's, I received, sold, exchanged, or otherwise disposed of any financial interest in virtual currency. It's a very simple yes or no question. Most tax software defaults to no. Many cases, when you're using a TurboTax, I know our in-house professional software defaults to no, and many people don't even see that, especially self-prepared tax returns don't even see it. If the answer is if you file your tax return saying no, and the truth is the answer is yes, and a big yes, there's a lot of currency, there's a lot of transactions that you're not reporting, the IRS would consider your tax return not properly filed. It's not just that you didn't report certain transactions, it's also that you said no to that question. And it's worded like that on purpose because it catches you in a whole different category of potential penalties and interest. It's called this in misfiled tax returns. So the answer there would be if you are, on its own, it's not a red flag. If you're buying crypto and you're holding crypto, you say yes, there's nothing wrong with it. They're doing this for those who are trying to hide things, because then you say yes and you didn't report it, but you signed your tax return. Well, you attested to something, because you're generally signing your tax return subject to penalty of perjury. So you said yes, you didn't report something, and you signed a return, or you said no and you didn't report something and you signed that return. They're doing this very vaguely and on purpose, but like I said, it's right there on page 1. And if you look at the form, you may never have seen it before. Go back and take a look at your tax return. It's right there. And in 2022, it's going to be larger and bolder. So it's just their way of saying we're looking into this. There are no real rules, no real regulations specifically, but it's an area the IRS is looking into. Thank you very much, everybody, for your attendance today. Thank you, Eric and Chris, Christy and Kim and the chamber. And we're going to, I think, go back to Kim to moderate a little bit, but we're also, and Christy, but we're also opening this up for any questions and discussion. Thank you.
Yeah, if anyone has any questions, feel free to go ahead and unmute and ask away.
I
And at this point, Eric, Chris, and I are going to mute.
I'd like to point out something I got in a chat here, which is Matthew correctly pointed out that while there is some decidedly bad things that cryptocurrency is used for, like funding terrorism, it's also been helping Ukraine fight back against Russia. So, you know, it's there's good and bad that comes with this stuff. And that was a really good point that Matt made. But let's get some questions. Come on, you guys all have questions. And I know Mitch Rahm does. There's no way you don't, my man.
Well, I'll chime in here. You know, and I'm obviously I've got a technical background, Chris, but you were like way over my head from the minute you open your mouth. Okay? I'm just being honest. You know, I mean, I heard all the terms.
I'm not the only one.
I've heard all the terms that you described, but it's like a jigsaw puzzle to me, and I got to at least get the edges of the puzzle I need to equate it to something else that I understand in order for me to conceptualize everything. And so I just wanted to just, you know, I don't know who's the right one to answer this question, but when I think of crypto, well, when I think of investing, you know, for retirement or whatever, I guess Eric talked about this. I mean, I think about stocks and bonds and equities, things of that nature. You know, and I know that when I buy one of these companies, you know, in theory, the stock, you know, the stock that I get in that company, that could go to zero. That company could go bankrupt. All the shareholders could be wiped out. And that's with all the regulations and the SECs, et cetera, et cetera. My thinking these days is that buying crypto is akin to the penny stock market. Would that be a good analogy? Commensurate with the risks and rewards. I mean, would that be a good way to think about it? And might that be the use for it in your portfolio?
Well, potentially, I mean, you could look at it that way, but penny stocks are so risky. But you pointed out something important. Even very large companies do go out of business. Some of them overnight. Lehman Brothers, GM went bankrupt. I mean, Kodak, you know, been around for 118 years or whatever. And that's why, generally speaking, we don't encourage people to buy individual stocks, but portfolios of stocks, because the market's not going to go away. It's and when these individual companies go, they won't hurt. But crypto probably is not even as regulated as penny stocks, and penny stocks can be pretty bad. So I would say that there's no place in a portfolio for it. It would strictly be trading, or you're in the business side, or you're literally just going to take a small percent and gamble with it. And I will note that if you go to Maryland Live and you make money, they will pay you. And if you lose money, they will give you an IRS form. And that's not always happening with crypto companies.
There's two, I see it as two, the crypto has two sides. There's the cryptocurrency side, which has utility, which has, it's being used for transactions it's still in its infancy, but it's being used for folks to buy, sell, move money around, good reasons, bad reasons, etc. And it's being used as currency. And there, like I said, there is utility there. Because of the value and the supply and demand, somehow, the investment side has come out of this. But at the end of the day, there's like Eric said, there's nothing there. There's nothing there as an investment. It's strictly this supply demand that can just change with the wind. Not to say that cryptocurrency is inherently bad. It's got its currency side, But as an investment, you're really not investing in anything. It's just this hope that it goes up and hope that it doesn't go down. And that's very different. If a cryptocurrency company is successful and goes public and has shares of stock, now you're investing in the ownership of that company. No, that's different than investing in this thing called the actual currency side. When you're investing in a business, like we just said, it could go down, it could go to nothing, but there really is something there if you believe in it, if you do your research, and it's somewhat, they're in the business to try to make money. There's a purpose behind it. It's got management. It's got, in many cases, there are assets, maybe not. It's a service business, but it's doing something. It may go to zero, but it's sort of doing something. I kind of equate investing in crypto as the old days of you bought Beanie Babies, but in this case, you don't even get the Beanie Baby. Only from the perspective of there's really nothing there as an investment. It's surely the hope that other people buy in after you.
I mean, are you saying it's a Ponzi scheme there? I mean, is that what you're saying, Barry? Or
I didn't say that.
okay,
I don't know. I don't know what it is. As an investment, I really don't know what it is. It's just this thing that people are throwing money at, and then they're hearing stories in the news, so they're throwing more money at it. I guess those that were the early adapters that made millions or billions are excited about this.
You know, that's a funny way to put it, Barry, because you're 100% right. But if you look at it from like the what I would call the end user's perspective, or in Eric's case, you know, your investor, I've got money in stocks. I've got nothing I can point at with that. You know what I mean? It's not like I'm holding stock certificates. You know what I mean? It's just somebody told me that my money's over there, that I have 77 shares of Apple stock. From my perspective, it feels like exactly the same thing. You know what I mean? Maybe that's why people are jumping on it, because it's at the end of the day, it doesn't, you're right, it is different, but it doesn't feel different.
I understand that. The old days, you actually got a piece of paper that was just a piece of paper.
Yep. Yeah, true story.
So yeah, I guess you could say technically, since Nixon took us off the gold standard, you know, what is the dollar really? You know, I mean, it's what's the foundation of the dollar? I guess it's the right of the government to tax its individuals and whatever, but you know, it's all built on a foundation of sand, it appears. So I don't know. I'm just why would, other than a trip to Vegas, you know, I'm not hearing any reason. If this is such a bad investment, why are all these investment houses defining crypto now as an asset class and allowing you to create retirement portfolios that have a percentage of that asset class in it?
There's a simple answer to that, and that's because there's a lot of money for them to make holding your crypto, charging fees, transaction fees, and for them, they look at, you know, if you want it, they'll stick it in your portfolio just like they will gold or commodities. And most of them, you know, it's not about whether it's a good investment, it's about whether you want it, and they're servicing it. And to your point about fiat currencies, which is government currencies, you know, that certainly have had problems in certain countries, but the big thing there is that there's a collective agreement that the dollar is the dollar, and the government backs it up. Now, how they back it up right now, you can see what happens when they print too much money and stuff, and we're having inflation. But at the end of the day, if you go to your bank and ask them to get one of your dollars out, they will actually give you a dollar. You know, you could be pretty sure of that, and that's part of that system that makes it different from some of the crypto. And I think crypto will grow up, and there'll be a few survivors that'll be public. Now, one that won't is Bitcoin, because Bitcoin is this loose association of people all over the world. It may be one of the better ones because it's a limited amount of coin that'll ever be produced. But some of the other companies will become public, like Ethereum might, and they're changing some of their ways to mine these coins differently. So it's one of those things where some of the companies will be valuable, they'll be in portfolios, and they'll be just like any other company. But owning any individual anything has the risk of it going to zero. Always. It could be the biggest company in the world. it could go to zero. So it's just not a great idea to own anything in concentration like that. One thing I want to point out that we didn't really touch too much on, but Chris talked about the noise and the heat. A lot of these companies ended up in Virginia and West Virginia, where they have the TVA, Tennessee Valley Authority power, really cheap hydropower. And they're building them like chicken farms. They're gigantic banks of servers, and they're open with roofs on them. And now they have a huge noise pollution problem in the country because it sounds like a jet that never actually takes off. And they use enormous amounts of energy. In fact, Ethereum last year, just one coin company, used more power than the country of Portugal just to keep its coins alive.
Yeah, your number one expenditure is power. That, how often can you say that about something? It's very unusual.
Chris,
Well,
how much did your power go up the 2 years that you mined?
You know, it's funny, Kim, I kept track of a lot of things because like I probably sunk, all said and done, I probably dropped about 25 grand in the equipment. And I'll have to find some pictures because some of the equipment looked cool. I told you guys some of them were like thumb drives with heat sinks on them. Well, I would have a 9 USB dock, and they were so hot. I had these little gooseneck fans that were ripped around this way that were blowing air across these flash drives. It was the weird. I mean, people would come by and be like, "What are you doing in there?" Like it looked really crazy. But I refused to figure out what the power consumption was because I didn't want to piss myself off.
Hey, Matthew has a good question. So about mass adoption, et cetera. So he picked up that I'm not really a fan of it as an investment, but I did point out, and it is true that a lot of these technologies are very useful for international settlements, et cetera, and they are being adopted by banks and trading houses. Now, the different, he pointed out that money laundering, et cetera, is also done through investment houses, banks, et cetera. And that's true. The government spends a lot of time following up on that. In fact, we have to take classes every year in money laundering, and it is a big problem. But with crypto, it's just so easy. It's totally unregulated. And so they're just trying to bring it into the fold ultimately of at least looking at it and making people aware of it. But I do think that the parts of the industry are going to be in our lives. They'll be adopted into everyday technology. A lot of the companies will be bought up and disappear into other formats, especially the contract and blockchain side and some of the security technology. So I'm not down on the industry in a whole, just saying that right now, specifically when you're looking at the coins themselves, there's not much there to speak to as an investment or a currency. And we'll see what happens as it grows up. I hope that answered your question.
And I just also want to add, Chris was talking about the NFTs, the non-fungible tokens. That is a very different category. That is a very different item than cryptocurrency. A lot of people speak of all these new words and throw them in as one big thing, that it's all the same. Now, whether or not I'm going to pay 3.2 million for the digital rights to the monkey, that's each person's personal preference. But in that case, NFT, the non-fungible token, you do end up with something. What it's worth, what the value of it is, who knows, that the market, but there truly is something there. Granted, we can say cryptocurrency has something too, but it's a little bit different, where it's sort of having a dollar bill. And I'm going to try to sell my dollar bill for $2, as opposed to, I have this image, a digital image of someone, something, and I'm the only one that has it.
That's a good point that you bring up, Barry, because if you think about it, there's the silly side of NFTs, like where somebody bought the virtual lot next to the virtual house that Snoop Dogg built for $100,000. But on the practical side, anytime somebody creates a unique piece of art, let's say a real painting that you put on the wall, if they create the NFT with it, now you have certification as you go into the future that that's actually an authentic painting. And that could be very valuable.
So I'm very new to all of this. So my question is, with the NFT, is there like a resale market in this? So the $3.5 million for that stupid picture that Chris put up there, like, sorry, just my opinion. Like, is there literally a resale value to that where someone's like, oh, cool, I now want to pay $4 million for that? Like,
It's a thing, Christy. As weird as it sounds.
I mean, I think I'd rather have the house or the lot next to Snoop Dogg's house or whatever Eric just said. Like, I think that makes more sense. It sounds like cooler, like this, some like that I could see having a resale value, but like, I don't know. I guess that is confusing to me.
It's
Christy, just for the record, you insulted me because I was the one that happened to be just outbid for that. I was close.
Well, the thing is, yes, there is a resale market, and there's online auctions and stuff, and who knows what the future holds. Some of the ones that we described, sounded kind of silly, and like, for instance, the lot next to Snoop Dogg was sold for 6 figures, and now I think it's worth $15. But it could go up. And with some of these other artworks, like the ape thing, I mean, somebody might want it for $5 million down the road. We don't know. Nobody knows.
So I guess what is going through my head is in real estate, which I understand, there is limited land and we're not making more land. But when you think about like the virtual world, isn't there unlimited space? So how is that going to be more valuable if you can just go and create something else that is very similar?
I would almost liken it to a baseball card.
Okay.
They're still making baseball cards. So, Manny Machado is going to get a baseball card made every year, but there's only going to be one rookie card. I guess you could say it's like a collectible.
No, that actually is a great analogy. I appreciate that.
Yeah, that would be a case where if you had the NFT with the actual card, then when you go to a collector or something to sell it, you'd be able to prove that's actually the original card.
Hey, Christy, just to comment on what you were saying, I think we're focusing a lot on the Bored Ape images or the metaverse, but I think believers in crypto or NFT think that I'll use real estate for example, because you said you work in real estate, that maybe one day all real estate will be on the blockchain, and you would utilize NFT technology to facilitate real estate transactions. So I've heard real estate professionals talk about that.
Absolutely.
Yeah, that just confused the hell out of me.
I'm gonna, Christy, for example, the amount of time, effort, and paper spent buying and selling real estate transactions, and all the recording of mortgages, and literally, I believe there's like a paper file when you go downtown somewhere that could conceivably, I'm not speculating, but that could conceivably become blockchain technology through NFTs or something else, where it could be done a lot faster, quicker, easier, and not everyone has to necessarily show up at the closing or do everything through digital signing emails, and it can happen a lot faster, and still easily be proven that somebody owns that piece of real estate, that deed.
Okay.
No, that's a very good area. That's like the international bond settlements. Imagine having your title search, your house, your mortgage, everything done in minutes, and having a permanent record that everybody can see at all times to know that it's real. It will change many industries. So there is very much good coming out of this. But a lot of people really think of crypto as the coin, and that's a whole different thing than the technology, which will be adopted for many purposes.
I have a
Great.
question. First of all, this was, I think, as well done as you could, considering the level of my knowledge. I like the way you started with the definitions and then you moved a little deeper and then a little deeper. I have to listen to this again because it's way over my head. Anyway, Chris, so you decided to invest in mining, right? So you stopped mining and you made a significant investment, at least to me. Was it for the experience? Was it to understand it? Did you get your money back? What do you think?
Good question. So I did it. Actually, this is you'll appreciate this, Eric. I was like, man, I don't understand the stock market. I was probably like 19. So I bought some stocks. I'm like, I'm going to learn. It's going to go up. It's going to go down. Back then, we had to look up the stock prices in the newspaper. That's how you found out if things are going up and down. But so the short answer, Patrice, is I was like, you know what? Let me get involved and then I'll understand it. Because even now, all this time later, it's still kind of this weird esoteric thing that most people are like, what the heck is that? So I started off that way. So I made about a $25,000 investment, but that wasn't like on day one. I bought something that cost like $150 and got started. And then I was like, oh, this is kind of cool. And I was doing the mining pool. So I had this thing that would pop up where I could see what I made every day in dollars. And, one point I was like making 20 to 40 bucks a day, essentially not doing anything, which was kind of neat.
Because you're just mining it. And when you're mining it, you're getting it for free, but you made the investment of the equipment to mine. So
Yep.
it really wasn't for free, but that's how you can either buy the crypto or you could mine the crypto.
Correct. Yep. So I was mining it. And, hindsight is a super powerful thing. If I had sold my Bitcoins, I guess it would have been about a year ago, I would have made $250,000. So that would have totally made it worth it. But instead, I held on to all of them.
Right.
And didn't, you know what? No, let me back up. So I made a little over 6 Bitcoins. And then at one point they hit, I think it was like $5,000 a Bitcoin or something like that. So I was like, let me kind of hedge off my costs. So I sold one. And then a few years ago, and this was a mistake, but a few years ago, we had a client that wasn't our client yet that got hit with a ransomware attack. And the people wanted to be paid in Bitcoin and they wanted 1 Bitcoin, which doesn't sound like a lot, but back then it was $2,000. So rather than go through the trouble of buying a Bitcoin and then sending it to them, I told the client, I was like, hey, these Bitcoins are worth $2,000. I have Bitcoins. You want to just reimburse me $2,000? And they said, sure. So I went down from 5 to 4. Now, what are they worth? I haven't looked them up lately. What are they, about $20,000 now? Something like that. So I'm kicking myself for doing that because I, peed away $18,000. I should have just held on to my stuff, but you just never know what it's going to do. They could be worth $10 tomorrow, so it's kind of all over the place. I'm a nerd, Matthew, you got to sign off on this too. It's a nerdy thing. So it was like a hobby. I thought it was funny because you couldn't walk past my office without going, what the heck is going on in there? Like it was crazy. There were lights going. It was a hoot.
So, and one last question, you may have, because I was not doing a good job of multitasking while I was listening to this and then realized, oh, no, I need to have all my attention over here because this isn't a half conversation. I have to listen to you all. But did you introduce what you do? Like Chris and Eric and Barry, like I see you're like, who are you? What do you all seem to know each other and I'm new to this call. So.
Well, Christy did it at the very beginning.
Okay.
But
I jumped on late, so thank you.
Yeah, no worries. So just to reiterate it though, I own an IT company in Crofton.
Okay.
Eric's financial advisor. And Barry is what I would call a bean counter, but really he's a big deal in the tax world and his office is in Laurel.
I kind of got that from your presentation. Thanks. And Eric, you do investments, I assume.
Right.
And it's interesting because people want to learn about crypto, but you really don't want to steer them because of the risk. And that came out loud and clear. I thought, Mitch, you had great questions too, and thank you.
Mitch always has great questions. That's why I was picking on him.
But
So
I love the way he started. We don't know what the heck you're talking about, but that's okay.
And there's
trade barbs over being nerds because we're both in the nerd industry.
There's an additional question from Hazel. What are the different types of cryptocurrency? I've heard of Ripple, which to me was a term for cheap wine years ago. And yes, from Ripple, you can make jam pipple. There's a lot of different kinds of coins, probably thousands of companies and associations that mine coins. There was actually one that started out as a joke called Dogecoin. Literally, it was a meme. And then Elon Musk spoke it into existence and it became an actual coin. So there's many of them. You just have to do your research if you want to know about them. But there are probably 20 or 30 that are big household names that we've talked about, a few of them, Bitcoin being probably the original one. Some people use Bitcoin as a substitution for crypto, but it's actually an organization. But they're all doing essentially the same thing as far as how they're created.
Yeah, that's accurate.
Okay, well, are there any final questions? We have gone over time a little bit, but these are all wonderful questions. No? Well, if not, we'll go ahead and wrap up.
Excuse me. I'm sorry. Yes, and I joined just at the end. I just want to know if there will be a recording of this.
Yes.
Okay, great.
Yeah. Yeah, we'll
Yes.
be sending that out shortly after the program. Yeah.
Okay.
So thank you again to Chris, Barry, and Eric. This has been a really fun and educational program, and we did record it. So we will share the link to the video of the session along with all of our panelists' contact information and the attendee contact information also from the chat. We'll send that out by email a little later today. So keep an eye out for that. If you don't receive it, just reach out to one of the staff and we'll make sure that gets in your hands. We do hope you'll tune in for future webinars. We try to have something at least every month. And we also have a lot of networking events and things along those lines. So our schedule can be found at centralmarylandchamber.org. And again, thank you so much to our presenters. This was wonderful. And we hope to see you soon. Have a great day.
Thanks, everybody.
Bye, everybody.